Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Monday, January 26, 2015. You're looking at a daily chart of the SPY, and we had a fair update today. The S&P was up about 5 points. The SPY was up, at the end of the day, by the time it finally closed, was up 84 cents. That's a little bit, includes the aftermarket. But nevertheless, it was a pretty good day. It was kind of mundane most of the day, and then at the later part of the session in the afternoon, we saw one of those buy programs in. The volume was relatively light today as compared to the last few weeks. And it's actually the lightest volume day. I'm looking back here. Looks to be since December 30th. So this was the lightest volume day of the year, and you can expect tomorrow to be even lighter if the snowstorm in the Northeast materializes and a lot of people can't make it into work, make it into the, on Wall Street and the stock market and all that stuff. If you just have a lot of traders that get stuck at home, you're going to see a light volume day. But all in all, so we have a lot of stuff going on. So what do we have? We have two things that are important that are kind of conflicting each other right now. And I'm going to tell you what I think is going to happen for the remainder of the week. I think it's pretty important. You have a weekly bottom, okay, that was made down here, okay, last week on the 16th, okay? So you had a weekly bottom put in, and that should be good for right in the neighborhood of about 3 or even 4 weeks of mainly upside in the market, okay? But in the middle of that, you're going to have pullbacks. And I told you last week that between Thursday and Friday, we should see a daily top in the market that could be good for around, and this is typical, not always, but it's typical, 2 to 4 days of pullback in the market. Now, market was down on Friday, but it was up today, although it was up at the close. Earlier in the day, in fact, the overnight session gapped down at the open on Sunday night in the E-mini, the futures contract. And what happened was it gapped down, maybe like 10 points or something like that. We went all the way down to 2025 early this morning, okay, on the S&P E-mini futures contract. All right, and right now we're trading at 2052.75, pretty much where we closed the day, more or less today. Okay, so that's a 25-point swing from the early morning hours through the close today. So it was a more wild day than it looked like to most people that just take a look at where the market closed today. So what you're seeing there, and the reason I bring it up is what you're seeing there are what I'll call the forces of the daily cycle topping out. But underneath is a bid in the market on the weekly cycle, so you saw the market forces on the bigger time frame push the market higher. I know it sounds like hocus pocus, but there are cycles. There are weekly cycles that are stronger than daily cycles, and there are monthly cycles that are stronger than weeklies and stronger than dailies. And so these cycles can when they converge and they top or bottom at the same time, that's when you see big up moves like this one, okay? And that's when you see down moves like this one, okay, and this one. All right, you've seen probably more than one, mainly 2 or even 3 cycles converging at the same time. Right now, we have a larger cycle conflicting with a smaller cycle. So what I think is going to happen for the rest of the week, and now's as good a time as any to bring up the fact that Wednesday is the FOMC interest rate announcement, right? So they're going to come out with some nonsense from the Federal Market Open Committee, right, the Federal Reserve, and they're going to come out with some kind of rhetoric, and they're going to have an interest rate announcement. The Fed leaves rates unchanged. They're going to increase by 25 basis points. They're going to do nothing. Who knows? It doesn't really matter in the big scheme of things, but the market will react one way or the other. And that's as good a time as any between Wednesday and Thursday, in my opinion, for the daily cycle to essentially culminate on the downside. And where do I think that could be? Well, I haven't changed the picture on where I think that can be. What I mean is, between Wednesday and Thursday, I wouldn't be surprised to see the market sell off and end up down here at we'll just call it 202 for give and take purposes. And what that translates to in the E-mini contract, for you home gamers out there, is a break of 2,000 on the E-mini contract, and that's where I think the market should find a bottom, and I think the weekly cycle will take hold again and send the market back up higher, and I think we actually make new highs this time. I think we probably get up into the 2100 level in the S&P 500. That would coincide with about 210 in this neighborhood here in the SPY. So that's kind of what I think is happening over the next several days, and we've got to take it one day at a time. And the snowstorm may put a wrench in things, and the Fed may put a wrench in things. They normally do. Expect the market to whipsaw around on Wednesday around the Fed announcement. It'll go up, it'll go down, it'll go up, it'll go down. Whatever the first move is, it always ends up to be the opposite direction. So that's you don't really do anything around there. You just kind of wait for the market to settle in, pick a direction, and go from there. All right, let's move on. Well, you know what? Real quick, before we move away from the stock market, let's catch up with the IWM, which is really strong today, right? So the IWM had a nice day, and it was up $1.14, and it was up much more in percentage terms than the S&P and a couple of the other markets like NASDAQ out there. It was up about 0.75%. So what this normally will tell us is that there's a bid underneath the market and that the market is strong. Not to say we can't have a day and a half pullback, a couple of day pullback to finalize the daily top, but there's a bid underneath this market, and when the IWM is strong, it's at least telling you that buyers of stocks out there are willing to take more risk than is found in the Dow and the S&P for that part. These are typically smaller companies in the IWM, which is the Russell 2000 index. It's basically middle to small business America. And that's what the IWM is comprised of, and that is more risk than is found in the Dow and the S&P. So when there's risk on the table and the IWM moves up, it usually leads the market, so we want to pay attention to it. All right, let's move over to our favorite crude oil, and we'll look at the USO contract. And there's not much going on here again. We had somewhat of a down day, and although what was interesting was the energy complex was up, so the XLE was up, and the big integrated oils were up, Exxon, Mobil, Chevron, that stuff was up, and so you have a little divergence there. I wouldn't read too much into it. Oil still hasn't bottomed, but the sentiment is so pessimistic out there that it's just ripe for a market reversal. But we've got to let the market tell us it's reversing. We can't impose our will and try and guess a turn, pick a bottom, catch a falling knife. It's a fool's game. What we have to do is we have to watch the market and look for the high volume reversal day where we finish close to the highs and we make a new low. And if we can catch one of those days, and let the market put in a bottom and tell us so, then we can take it for a little ride. But until we see that, we don't have to pick the bottom. We don't have to get the bottom. It's not important, right? I want to have a higher probability trade, maybe with slightly less of a gain, but more probability. I'll take that any day of the week than a higher risk trade with more reward at the end. I want the lower risk, and I want the more sure reward. And that's why we wait for the crude oil market to bottom before we do anything with any of the energy stocks or crude oil itself. All right, let's move on. Gold. This is a good one. Right now, we're seeing exactly what we've been talking about. We topped out at gold of about 1310 or 1308, something like that. I said 1300 to 1310, and that would be the range that we would need to see a pullback. And here it comes. That coincided with 125.5 in the GLD. All right, this pretty close to this closing high here. Okay, and then we pulled back for a couple days. And what I think is going on here, and what's interesting, I'm going to use the numbers in the gold futures contract because that's where I do my analysis off of, and then we move over to the GLD to talk about it because I don't have the futures contracts on this platform you're looking at. So anyway, Gold is trading at 1276 now. It's already been down to 1272. This is the in the Globex session, the aftermarket session. So I was telling you that I think a good stopping point here would be the 200 period moving average for gold, and this would coincide with roughly, let's just call it 1250, give or take, in the gold futures contract. And what I think is going to happen is I think that too many people are looking at that level. Okay, too many people are expecting gold to come into that level, and the sheer velocity in which this rose tells me that there's a pretty strong bid. From down here to up here is a pretty good rise, and especially in gold that's been dead for months, and actually years. Okay, 3 years gold has been on a downtrend and dead, and all of a sudden we start to break out. And what that tells me is that there's probably a stronger bid underneath the gold market than most people realize, and I think that's going to actually prevent it on this move. And this is a maybe I'm going out on a limb here, I don't know, but I still expect it to pull back a little bit more, but I don't think it gets to the 200 period moving average. I think we get to about 122, give or take, in the 120, 175 to 122 in the GLD, and I think we take off again to the upside. And I think that coincides with about 1265, give or take $1 or $2 in the price of gold futures. And we'll see what happens, but I get a funny feeling we're not even going to get to the 200 period moving average. So if you're long gold and you stayed long gold, I think you're okay. If you're looking for an entry point, you better find one soon, because I think it's going to take off to the upside again here. I don't think it's going to stay here long. That's just a hunch. We'll see what happens. We'll play it day by day. We'll take it day by day. Let me just review my notes, see if I have anything I missed. No, I think I got everything. That was pretty good. Hopefully it's helpful, folks. I'm David Frost, MyStrategicForecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.